At the end of the Monetary Policy Committee meeting, the central bank decided to keep all rates unchanged. The decision by the Apex Bank has any effect on the stock market performance, and let's see what that means to trading at the floor. Well, to discuss this, a stockbroker, Jamiu Mohammed, joins me now live from the floor of the Nigerian Stock Exchange, downtown Lagos. Jamiu, when these figures came in, how did it come to you, and what effect do you see this having on the capital markets, according to the fact that we had 1 week, that was the last week, of positive trade?
Okay, thank you very much. It's expected that the Monetary Policy Committee will retain the rate as at yesterday, that they will retain the rate. And it's simply put, though there's a line of caution from the angle of inflation rate going up. But if you look at that, the inflation rate, you will realize that it's being caused by the closure of border. And this is can be seen from the angle that you see core inflation coming down while the real inflation is going up. So what this implication means is that it's only food inflation that is going up, and that is as a result of the border closure, and which we believe is going to short-live in a very short period of time. You know, border closure is a short-term measure to make sure that the supply side of the economy is being worked on, so that they will not create an economy that will form a dumping of the goods. So as far as I'm concerned, the rate is better retained at that, since the mission of the MPC is to retain the inflation, to bring inflation rate to a single digit. So they are still in that mission, and I believe the mission can be accomplished in a very short period of time. So if they alter the rates, I believe it's going to alter whatever effort they have been putting into place so far. So if you look at the implication on the market, you see last week or week before last, the CBN come up with reverse policy on OMO, and also the issue of rate at the money market is now brought to a level of 8 to 7%. So in that regard, people are now running away from the money market to capital market, and that is the reason why you saw the kind of activities you saw in our market last week. And I think the government is working in the right direction to ensure our market is stable. There's nothing wrong fundamentally with our market. Rather, there's something wrong with our economy, and that thing is that the monetary rate cannot be higher than capital market, because whatever rate that the rate of return, where the rate of return is higher, is what investor will run into. Now that the money market rate has been reduced, now the capital market is the next option for the investor to invest their money.
Jamiu, that is a good one. Are we right to say that confidence is gradually returning to the Nigerian capital market after some time where we knew that investors were sitting on the fence? Are they coming back at this time?
Yes, I told you earlier that anytime, any day, the confidence in our market is there. But what affects our market is sentiment. And the sentiment is around the rate that it plays out in money market and in capital market. Now the rate in money market is down. The next destination of investment is now the capital market. And that is why you see that kind of rush in capital market. And even the level of activities has increased more than 100% in the last week. And also you can see the level of activity this week also in the market. So all these things show that there is always confidence in the market, but the sentiment of the investor is the one that was dragging our market down. Remember, I told you, our stocks in Nigeria, all the stock traded on Nigerian Stock Exchange, is grossly undervalued. And whenever you see stock grossly undervalued, that is where you see investors supposed to patronize. But because of the rate they are getting from the money market, makes the investor to run away. But now that the rate in the money market has come down, they are finding their ways back into capital market.
Jamiu, let's touch on some sectors now as we round up the month of November. By next week, Monday, we are in December, the last month for the year. What sectors are we looking at, talking about investors' appetite this time?
Yes, tomorrow is going to be last day of trading in the month of November. So when we come back on Monday, we are starting a new month, which is December. And mind you, this December is the month of rally that we used to expect. It has been a trend that every December will have a bullish month, and it's always happen within the month of December. But the actual week of December is what nobody can immediately pinpoint. So it used to happen either of the whether first, second, or third week of December. But what is sure is that we always have a bullish run in December, and it is simply because of the fact that the fund manager wants to balance their portfolio. Those fund managers that have bought their stocks at a very high price before, and the market is currently trading lower than the price they bought, they have to balance it up to make their portfolio good towards the end of the year, because they don't want their books to be, their portfolio to close the end of the year with a bad outlook. So they always come to rush in the December, and that's what we expect to happen in the month of December.
Jamiu Mohammed, thank you very much for your time, breaking it down for us, the effect of CBN's decision on the capital market.